What is up, Zinger Nation? I hope you guys brought your notebooks, pencils, all your other school materials because today is day one of class. We're going to be bringing you through our workshop, our syllabus to make you a pro trader. Well, at least make you, teach you all the things that the pro traders do and hopefully take your trading to the next level. We're going to be doing this with my man, Ryan Pannell from KAIJU. So without further ado, let's go ahead and welcome Mr. Pannell on the show. Let's go ahead and give him our intro. And we come back, we will be starting our class, day one. So again, get ready, be prepared. What is up, Zinger Nation? Welcome back to another episode of Benzinga Live. Happy Tuesday, everybody. So welcome to the Benzinga / KAIJU educational series. Here's your professor, Mr. Ryan Pannell. Ryan, how you doing today?
I'm good. I don't think anyone's ever called me that. So that's a nice change. Here's your professor. I'll take it. I'll do my best.
Well, so Ryan, before we get started, let's talk about the aim here for a second. What is this series? And who is it for?
So we're going to do an 8-part series taking us from now until just before Christmas. It's really for anybody who's a retail trader and investor, regardless of your level of experience. I hope that there's something in these episodes for everybody. Obviously skewed towards the novice retail investor or trader that's kind of wondering, have they started in the right place? Where do they start? Where do you get an education? Brokers, does it matter? How do I use these tools? What should I be looking at? Where do I get my news? All of the questions that people have starting off on the retail side of this business, answers that are generally provided on the professional side for us when we're mentored by whomever we're interning for, running coffees for, or whatever that isn't provided on the retail side. We're going to cover all of that in this series.
Beautiful. I'm excited. And, like you said, there should be something for everyone in this series. So whether you are just starting out and you've never even placed a real money trade yet, maybe you've only dabbled in paper trading, maybe you haven't even gotten to paper trading yet, you will definitely learn a lot of things by tuning into this series every Tuesday, 11 a.m. Eastern, just live here on YouTube. Best part is completely free. You just tune in, watch, learn some great things. So yeah, like I said, whether you're just starting out in trading, whether you've been doing it a little bit, you're a novice and you're trying to, like if you were skiing and right now you're skiing down the blues, but you're trying to get to the blacks, you're trying to take that next level, this series should be for you too. And even if you're at that highest level, you should be able to learn a few things. And Ryan, before we begin today, do you mind just giving us, introduce yourself to viewers who may be viewing for the first time? Give us, your bona fides. Why should we listen to you? Why should we call you professor?
I don't know if you should call me professor, but I don't know if you should listen to me. But I've got valid information to share. It's worth considering listening to me. I can say that. I started a long time ago as a retail trader and investor. I come from a theoretical physics and cryptography background. I applied that to quantitative trading. I then became a professional trader. I was a portfolio manager for one of the largest funds in Europe. I then spun that out into my own hedge fund and then several funds in building KAIJU, which is a global leader in AI curated and directed investment strategies. We've been doing that for a long time, long before all of this recent buzz kicked up. It's very validating to have it. Happy that the day is here, but we've been here for close to a decade doing this. On the private fund side, we've got a new product out on the public fund side, an ETF called DIP, which is AI curated and directed. We're launching more in the future. And I have done the job all the way from the bottom to the top. And I hope that the information that I can share will be useful to people at any stage of their development. even if it convinces you that you don't want to move to the next stage or you're happy where you are or whatever. So again, not sure if that's enough of
Hey, I'll take it, Ryan. I'm
credibility.
sure I'm
You'll take
sure
it.
that our viewers will as well. So, I know, Ryan, there are a lot of viewers and people in general out there that are curious about day trading that have maybe not made the leap. And I'm sure you've seen this, but there are, so many courses online there, people trying to sell things. Where should someone begin? Right? Like it's hard to know what the first step is. And in my opinion, we need to start with education.
Yeah, you're 100% right. And I'm sure in your own journey, Aaron, you've struggled to find which guru, which course, which podcast, which YouTube influencer in the stock vein you should listen to, because there's a lot of information and misinformation out there. Um, Before I give you that answer, I just want to clarify one key point, and that is when if we're talking about day trading, that's a term that gets misused sometime. I think we're really talking about self-directed retail trading. So you are an active trader. You manage positions daily, to weekly, to monthly, doesn't matter. Position traders, everyone's welcome here. Um, that term day trader though really is applied to like intraday trading, and we're not generally advocates of that on the professional side. There's not a lot of positions that we take and scalp pennies from, and like we're in and out in a matter of hours. It's close to close is about the shortest time frame that we'll trade. So just to put that up there, we wouldn't advocate these intraday scalps. They're over time, the cost of trading makes them not profitable. So setting that aside, where does somebody start? Well, you've got a bunch of free courses online. You've got a bunch of paid courses online. The first question that you want to ask is the credibility of the person teaching the course. If it's another retail investor, who's done made good, and this is their Lamborghini and this is their penthouse in Miami, I would be enormously skeptical of those quote unquote gurus. Almost all of them have never traded professionally, and by that I mean for a buy or sell side institution. What you're seeing in terms of the lifestyle that they're selling you is more often a reflection of their skill as a marketer. People are paying hundreds of thousands of dollars a month for access to their secrets and tips and tricks and newsletters. And that's what's buying the Lambo and the Miami penthouse, not the actual trading outcomes. And when they do post their trading outcomes, 99% of the time, these are low float stocks where the guru is taking a position really early in a penny stock that's low float. That means there's not a lot of outstanding shares, which means that transactions move the stock very, very actively. And then they release something saying, hey, you should take a position in this. The stock explodes actually as a result of your buying, and they're actually selling into your buying. So later they post, yeah, I made 50 grand on this trade. Well, they took 50 grand from you and made it on the trade. And so did you if you got out in time. But if you carried it over the precipice, that's a long way down. So I would advocate not following those people. So where can I direct you that's reasonable? On the option side, you got two resources, both are free. You got Option Alpha, and that's run by a guy named Kirk Duplessis. Kirk's a former Goldman Sachs options trader. He's a smart guy. He's got a lot of tools on that website that are available for absolutely nothing.
Yeah,
And
great resource.
you've seen it before, right?
Yeah, yeah,
Aaron,
oh yeah.
you're familiar with Kirk, yeah. So he's got hours worth of training you can just watch for free. Continuing on that, there's the guys over at Tasty Trade and Tasty Works. That's Tom Sosnoff and Tony Batista, Liz and Jenny. These are all former pro floor options traders and market makers that built Thinkorswim and then sold it for like $800 million and decided to make their own like options trading TV show and training program. So again, you can go learn there for free from real people. And then
That
once
is
you get
TechnoTrader again.
yeah, well, that's Tasty Trade and Tasty Works. And
Oh,
then
okay.
if you're looking for the sort of more robust cost, I got to give a plug here to Benzinga, because Benzinga actually, I'm not sure if your viewers know this, have a number of courses, a number of resources that are free, but also a number of courses that are paid. And the guy who runs the stock trading course is like a former market maker and a guy who traded for Stevie Cohen. So again, somebody who actually has done this job professionally and knows what the hell they're talking about. And then the alternative, just to be balanced here, Aaron, I don't want to, I mean, by all means, if you're watching this on Benzinga, go take the Benzinga course. TechnoTrader, who's run by another chartered market technician, Martha Stokes, and a former floor trader, Howard Johnson, that actually is his name, is another course that will take you from what the hell's a stock all the way through to being effectively able to trade stocks. So those would be my 4 suggestions to start off with. Options Alpha, Tastyworks, Tasty Trade, Benzinga courses, and TechnoTrader. Have you? Where did you get your education to start with, Aaron?
So I really kind of just started watching YouTube videos on like trading options specifically, and like kind of learning the basics of what is a call, what is a put, okay, how do you like place that, like, and then kind of really just started doing it to learn, obviously not with like a lot of money, um, and then continued watching like more and more advanced videos until the point where I felt more comfortable, and then after a while I feel like when you're doing it yourself, you kind of begin to get like an intuitive understanding. Like I would realize, okay, I'm holding this call right now, and the stock's not going down, but the call's losing value. That's because of the time decay. And like I didn't need to like necessarily like watch a YouTube video about the Greeks to understand that. It just kind of like through that experience and doing it, it I understood it, And so I'm probably not a great example because like I probably would benefit from reading some books or doing some of these more I guess, orthodox training methods, but I kind of was more just like hopped right into it.
I think that's probably the case with most people. I mean, that was certainly how I started in the very beginning. There was no mentor, whose shoulder I could look over when I started in retail trading. I wished, I mean, it was like a million years ago for me. So I wish that there were, significant YouTube resources. And I don't even know if YouTube existed when I was doing that. It's dating myself heavily. But I mean, there are good resources out there. It's just really hard to comb through them. And I feel like by gaining some sort of quasi-formal education, you will be better able to tell the complete BS from something that's usable. You start to recognize the language of the professionals, and that's helpful.
100%. And then so, we talked about different, resources. Do you have other, books, podcasts, videos, etc., that you would recommend?
Podcasts and videos, no. Unfortunately, I'm pretty busy during the day. I don't have an opportunity to scroll through videos. Ironic, given that we're making one here.
Yeah.
But books, sure. I mean, yeah, I'd suggest that anybody who is interested in trading, there's sort of two to three books that form a foundational base of knowledge that would be helpful. The number one is probably like 90% of your readers have already, or viewers have already read this. And it's the Candlestick course by Steve Nissen. He's the godfather of candle charts. A lot of the patterns aren't as leading or actionable as they used to be when they were just created by people. A lot of these patterns are now created by machine versus machine, but they're still generally valid. Like they describe a behavior in the stock that's worth drilling deeper into. And if you learn how to recognize those patterns, you can recognize opportunity, at least opportunity to look deeper, not necessarily to place trades. Like it's not 1988 anymore. You can't just like bang, bang, bang and trade off candlestick patterns, but they're still informative. So that would be number one. One that I know very few retail traders that have read is Trading in Exchanges by Larry Harris. And that's like, it might put you to sleep because it's fairly detailed, but it's a walk through all of the market mechanics that you actually interact with behind the scenes that you may not know about or understand. It's the LMMs, the DMMs, those are lead market makers, direct market makers, how flow is organized and distributed. Like information on what routes domestically are available, when you might choose routes, how routes are handled, how specialized order types are handled on the other side. So it's not your side. You're making these trading decisions, and then that's received by a bunch of market participants. And this is sort of walks you through all of that. So it's really useful. And then the last one, which is just, I mean, we've all read it. If you want to read one of the classics and have a laugh, it's How to Make Money in Stocks by William J. O'Neill. It describes a quote unquote winning strategy for all environments. I'm not sure I would go that far, but it's worth reading if you want something entertaining. Those are the three I would say.
And then, guys, if you're interested in any of these books, recommendations, or resources, we'll put all those in the description, and then you guys can just look at them there, and we'll also put a slide up that probably has those links you guys can click on. I'm seeing in the chat right now, why not? Great info by Ryan, Savant Trading, saying, is Kaiju a restaurant? That's all I could find when I Google it.
No,
I don't know if there's like a Japanese restaurant out there or something, Ryan, that's trying to steal your identity.
For a Japanese restaurant, right? Like the world's like Monster Sushi,
Yeah.
have the kaiju platter. That would be awesome. No,
I would definitely eat there. Hopefully though,
obviously.
Yeah. Maybe the chefs are using AI to concoct the sushi rolls. And...
Not likely. If you are actually interested, kaiju.ai is the URL of the parent company, kcm.ai is the private fund manager, and kaijuetfadvisors.com is the RIA. And from there, you can find out more about the DIP ETF. If you stumble upon the restaurant, though, and you're happy about that, I say go for it. I love sushi.
Yeah, I mean, yeah, even if you have to get it door dashed from like Connecticut to Wyoming, just do it. Yeah, why not? What should people, like, say I'm just starting out, Ryan, and I'm just beginning, what should people look out for or avoid? What are some pitfalls?
I mean, we'll dig into this a little more in future episodes, but the two that really always jump out to me is, one, people start building their trading acumen. They start learning, they're reading, they're self-educating, and then they go out with real money way, way too soon. Like almost every brokerage account has a paper trading feature. And then some add-on software, like if you're using TC2000, it has a paper trading feature. If you have an IB account, you can just call them and say, can you activate my paper trading account? You tell them how much money to stick in your paper trading account, and then you can practice using that. And like, if you cannot be profitable on a paper trading account, there's no chance you're going to be profitable with real money. And I always advocate for like at least 6 months on a paper trading account. Again, I know very few retail traders that kind of have the patience to stick that out. Like you're sitting there, your friends are all making money, the market's moving, it's up, down. You had a pick that would have made you $800 in a day, and you're like, oh man, why am I paper trading? It's because, and why 6 months? Because you need to trade through like more than one market condition. If you happen to go out, you're brand new and you're live, and you hit the most favorable market condition for the trading style you've picked, you're going to get this false sense of security. You're going to be like, this is awesome. I can't lose. I totally just made a ton of money last month. I made this much. And you start multiplying out in your head. If I bet more, if I scaled, if I did this, I'm going to quit my job. And then you hit a really difficult market condition. You get 2022 right in the face, and suddenly you're blown up. So one, like there's no reason not to take your time on the professional side. Like nobody hands us real money for a long time. Like it's a long time. You're a glorified order ticket entry monkey for a while. You sit at desk under some guy that's processing order flow for the trade team. You work your way to a junior trader position. You're doing like consolidations and crap like that in Excel spreadsheets. You're working upstairs, you're working at the tail end of the desk. And then finally, like you'll start placing trades. Like we go through a long period. There's no reason why you shouldn't give yourself a break, save your money, build the confidence as well. If you're awesome after 6 months, go for it. So number one thing, number two thing, keep it small. Like really, when you make mistakes, you want those mistakes to be small early on. I speak from experience there.
Yeah, I think, and that's what I actually, looking back, did well when I first started. Was I was kind of just, screwing around, buying like $50 worth of calls and puts here, figuring out how the whole options market worked before I started kind of ramping up my position size. So I did that kind of naturally by necessity, just because I didn't have the capital at hand to do anything more than that. But it ended up working out, because had I had more, money on hand and trying to do bigger positions when I first started out, I probably would have got burned. And yeah, so it was actually good that I kind of started small and worked my way up. Speaking of starting, Ryan, what was your experience when you first started? I mean, did you just immediately, like, did you have any beginner's luck? Did you fall right on your face? What was it like?
I actually wish that I took some wicked beatings at the beginning. Honestly, I didn't. I was
Wow.
well, yeah. There's a big asterisk next to that. There's a
Okay.
caveat, right? I mean, yeah, I was hugely successful quickly, and I got a lot of attention, which surged me forward. And then I got freaking smoked at one point, where I'd sold calls over the market on a stock that I hated, whose CEO I hated. And it was just fraudulent garbage. And, all of the signals were there for this thing to just tank. And I was there, my greedy little two hands, waiting for free money. And this guy kept releasing these BS PR statements. And I would, like, I'm chuckling about it. My friends are chuckling about it. It's like, who's he think he's fooling? This is going nowhere but down. But it didn't. It just kept going up and up and up. And my marks got worse and worse and worse. And by the time, and it was so far outside of my risk parameters. And this is like a long time ago now, but I couldn't believe it. I was just jaw on the drawer, the floor. This is gonna turn. Everything that you do not do as an amateur professional trader, I did all of those things. Was way past my cut line. And when I finally closed that, it was $100,000 of calls that I closed for minus 600K. So
Wow.
yeah. So I seriously wished
And it just
that
took that
I had
one position for that
it,
to be like that, like it
that
wasn't
that
like
that
a whole
no,
strategy. It was just that one position.
no. And you saw people get blown up, not me, but you saw people get blown up, with the meme stock explosion in exactly the same way. Like, your short calls for a company that's going nowhere but into the grave. But people take a run at it and it blows up. And this blew up. And the worst was after I'd covered and I'd eaten that loss. Not in time for me to be right, actually. It was past the expiration date of those calls anyway. But like 3 months later, that stock cratered 80%.
Oh, I'm sure.
And it was just, I mean, it was so painful on the way up. It was painful to watch afterwards. But that sort of changed my trading ideology, and I have never exceeded my risk thresholds, like, literally ever again. Nor have I ever traded that stock. I delighted in its implosion. I won't lie. And the guy, was turfed as the CEO, and charged with fraud and everything else. And that was validating, but it didn't make a difference. I made some tremendously awful trading and risk management decisions. So yeah. So if you're getting pounded on small money early, be thankful you're developing good skills. You're going to make your changes early on. Otherwise, like me, you may get a false sense of you can't do anything wrong and you're King Midas. And then when it comes with teeth.
Yeah, I someone in the comments where there people are trying to speculate on what company you were talking about. Someone said sounds like Tesla and he hates Elon, but then you
No.
said that he was expunged as the
Yeah.
CEO, so it couldn't be him. But did you get like PTSD when the GameStop stuff was going on, like from seeing people get caught in these shorts and being like, "Oh God, I know how that feels."
Yeah, no, I didn't get PTSD. What sort of jumped out to me, and no, I just to the guy on the, like, we're vol traders, so Tesla's awesome for us. Like, by all means, make crazy statements and shit like that all you like. It works for us. No, it wasn't that. Thankfully, it's a stock that's gone. For the meme stock event, no, what was the hardest to watch is that people didn't understand who they were hurting by buying this. Like, it was sort of, I watched from afar this happen, and obviously, Bloomberg Messenger is like lighting up, and my WhatsApp or whatever, you're getting messages from peers and whatever. Oh my God, have you seen this? You're not in this, are you? No, we're cool. And you're looking through some of the links that they're sending, and I was reading this Reddit, and I don't think it was Wall Street Bets, but someone had sent me a link to it, and somebody posted, I love that we're throwing a beating to all those hedge fund managers that got bailouts in 2008, 2009. And, like, I was just stunned, and I'm thinking, not a single hedge fund manager got a bailout in 2008, 2009. And this group had put the sell side banks who horns and tail for sure, right? Like, had put the sell side banks in the same category as hedge funds. I think just because you got the odd hedge fund manager who's obnoxiously wealthy and a bit of a jerk, so it's fun to watch him get pasted. But you've got pension funds allocated to hedge funds. Like, you got teachers' 401ks in hedge funds. Like, you've got like regular people as part of large investment managed groups are in hedge funds, and all those people got hurt blowing this stuff up. Like, do I feel bad for Melvin Capital? No, not really. I mean, that's the truth of it. I understood the short position, but that should have been mitigated super early. Easy for me to say 2020. So no, I was mostly horrified by the fact that the people that were doing it had misidentified who was getting harmed by doing it. For sure, they blew up some rich guys, but they also, a lot of normal people with allocations in those investment vehicles got hurt. So, what can you do?
Yeah, I mean, it is. I had a similar, like, I got blown up. Well, actually, no, not similar, because I actually did get kind of not blown up at the beginning, but I had a lot of success very early on because I started kind of trading options right before COVID hit. And I think I told you about this, Ryan, but I bought all these out of the money puts before the market crashed from COVID. The market crashed. I made a bunch of money, thought like, oh my God, I'm so good at this. I made $3,000 today. If I do that every day, every trading day, I'll have $600,000 by the end of the year. I basically stayed short, picked other companies to buy puts on, and then the market turned around very rapidly, and I lost most of the money that I had made from the crash. So I knew, I kind of learned through that experience pretty early on, just in terms of that was my like, hey, dude, like, take your profits moment, kind of like the pigs get slaughtered thing. I was like, because I basically had just taken everything that I had made and tried to, like, I started with probably a few $100s in my account, brought it to like 10,000 and brought it back down to a few hundred, whereas I could have taken out 5,000 and then been trading with 5,000 instead of a few hundred. Either way, learned some lessons. And that's all that we can do, and you're going to learn the most through actually doing it. But like Ryan said, if you haven't traded yet and you're just getting into it, start with paper trading. There's no shame in that.
Yeah, bad beats are part of the game. I mean, if you don't get a bad beat at some point, and this is maybe self-serving because I've had a couple, but I think it's harder to learn key lessons. Like, it's got to hurt, right? Otherwise, it's just sort of out there. It's like, well, yeah, that can happen someday. Yeah, you could get in a car accident tomorrow. It doesn't mean that we all, wear helmets and like are shaking getting into the car. It takes something jarring for you to really sort of register the jeopardy.
100%. So Ryan, how can AI be helpful or be of use to a beginner trader? I mean, is there anything a beginner should know about how AI will be affecting markets or already is affecting markets?
Yeah, sure. That's a good question. I'm really hopeful that AI tools for retail traders and investors become more prevalent, right? That people start building things that are not like like, not that you're going to go and this AI system is just going to do your investing for you, but you're going to be able to use the technology to backtest your models, your assumptions, with some intuity on it. So like you can go back and say, okay, so if I did this every time I saw this, what would be the outcomes? You get an outcome. You have an opportunity to fine tune it and tweak it. I think that would be hugely empowering. Those tools don't really exist yet. What should the retail investor know about tools that they could use? Generative AI is pretty good at culling information right now. Like, I mean, you still have to cast an eye over it. You have to be suspicious about some of the results. Some of them are wrong. There's a hallucination effect, which is very real. But if you learn to prompt effectively, you can find an incredible amount of information online that's otherwise very, very laborious to pull together. I mean, if you create the correct prompt to call 13Fs, 13Ds for specific information, institutional allocation changes quarter on quarter, and then you compare those to the post allocation price movement in the underlying, like you can see which institutional investors are leading and generally make allocations intelligently pre-positive movement in the stock. And you can see others that are just, it's part of a diversification and they were required to do so by fund charter or something like that. And it really can't be connected to any kind of outcome. And that can be helpful. Like that would take forever to comb through 5,400 listed securities that you might want to trade. But, GPT can do it pretty quickly, at least within a small cohort. If you give it energy stocks, tech stocks, utilities, whatever it is that consumer defensive retail, whatever you're interested in, it can do that. So I hope people will take the opportunity to learn a little bit how to use that technology. What to avoid? I'm going to say this like 50 times during this 8-part series, and I once we get to order flow, I'm going to talk about it in detail. Predatory order flow. So AI is very good at using order flow to, as best it can, create patterns in the underlying that are mistaken for something else and then trade off of those patterns. So we'll get to my huge bias against MACD as a trading instrument at all later in this series once we get to indicators. But that's something that, all professional market participants predate off MACD crossovers because we know it's a retail favorite. If I need to exit and I want to exit favorably, and for us, the pennies matter, right? Like, 5-10 cents on an execution just might not matter to your average retail trader. It matters when you're trading, tens to hundreds of thousands of shares. And so if I need a favorable exit and it's not time sensitive, then our executing trader will wait for a crossover, make that exit, because retail will take it at the offer every time because they misread it as like a power signal. It's like, this is going up. I get this beautiful 1224 crossover and I took our exit, which is crappy, but that's how it is out there. And AI does that really, really well, way better than we do. So understand that it's out there and what you're seeing may have been created for a purpose. It's not ideal for you.
Got it. Well, Ryan, we've kind of gone a little longer today, but of course, this is the first day of our educational series. Going to get all the viewers, going to get you guys on the track to be, just to learn everything you can learn from the professional side to make your, trading, whether you're day trading, whether you're swing trading, take that to the next level, get you guys a little bit closer to what the pros are doing. Ryan, and then next week we will be talking about brokers, and that's everyone's favorite. If you haven't started trading yet and you're looking around shopping brokers, trying to figure out, okay, should I trade over here at Fidelity? Should I come over here to Robinhood? Wherever. Next week, we'll be talking about the pros and cons of different brokers, how to pick the best broker for you, if it's time to switch, all these things. So Ryan, I am super amped up about that.
Yeah, me too. It's always something that in the beginning, people are just like, I want to trade. What does it matter? I'll just get in here. And then later you find out that the, commission fees and the short inventory is super important for you. And then, what the frequency is that they're filling you from inventory versus letting you go out to the floor. I think tons of traders don't know that 95% of these orders never see a lit venue at all. Like, oh, I didn't see my order go out on L2. It's like, yeah, it didn't. They just filled you from their inventory because you let them. So we can talk about how to make sure that the broker is working for you the way that you need them to. It is a two-way street. It's mutually beneficial, but it should be symbiotic, and hopefully we can get you there.
Yeah, and I mean, there are so many out there, brokers. You have so many options that there's no reason to not pick one that's doing all these little things for you. Like, you have that ability to do that. You have the choice of all these different options, so use that to your advantage.
Absolutely. And there's no one size fits all. I can't just say this is the best broker. It really depends on, what's your capital base and what are you trying to achieve. And then there's like a selection. Ultimately, the best broker is the one that helps you get where you need to go and with whom you can build a relationship. Like, as your capital base gets bigger, it's not just going to go up on screens and out electronically. Like you're going to be calling guys, on the desk there, and building that relationship is really important.
100%. Well, Ryan, thanks again for hopping on today. Looking forward to next Tuesday when we figure out what is the right broker for you. Ryan, enjoy the rest of your Tuesday, and thanks again.
Thanks a ton, Aaron. See you guys next Tuesday.
Of course. All right, guys, again, I'm going to drop those links to the resources in the chat, as well as the description of the video if you guys would like. Alrighty then. So let's go ahead and pull up our Benzinga Pro. We're going to do just a quick rundown of the market, see what's going on today. The S&P 500 right now, we're actually trading high. Okay, so this was interesting. I don't think we've talked about this on the show because I didn't know about this last Tuesday when we did the show. I should have known about this last Tuesday. But the S&P 500 closed green for 15 straight Mondays. Now, yesterday, the market, S&P 500, was green for most of the day. And I'll go ahead and pull my Benzinga Pro up and we can look at the chart here. But a late afternoon kind of, downturn brought the S&P 500 into the red. And so yesterday would have been 16 straight days, 16 straight Mondays of trading higher on the S&P 500, which would have broken the record. And right now, so again, yesterday was the first red Monday in more than 3 months. And today we're following it up with a green Tuesday. So I know the markets have been kind of ugly the past few weeks, and I was very surprised when I saw that stat because it certainly felt like there have been weeks where every day was red in the past few months, and including Monday. And I got to credit, I think that was from Ryan Dietrich's Twitter. Let's go ahead and see there. Whoa, that was weird. Also earnings. We'll talk about that in a sec. But did you guys just see that? I like clearly Googled Ryan Dietrich's Twitter, and then when I clicked on it, it went to a completely different page. Yeah, the longest Monday win streak ever for the S&P 500 just ended at 15 in a row. The previous longest streak was 11. Okay, so it was a record, 11 in 2005. Also, there was a 10-day streak in 2020. There was at one point in 1955, 22 straight Fridays that closed green. So that's on me, guys. Hands up, because I should have been on this trend earlier. I found out about it too late yesterday. I was like, okay, we got to close green today because it's Monday. And then, of course, the day that I hopped on the trend was the first day that it ended. But next time there's like a 10-plus day win streak on a day, I'll let you guys know so that we can start trading it to the upside. And then... So yeah, yesterday the market was trading higher for most of the day, ended up closing lower. The S&P 500 did. I mean, tech still closed higher, the Q still closed higher, but oil got absolutely crushed. You had this big merger deal announced with the Chevron and Hess Corporation. Chevron has been trading lower, and I mean, I wouldn't make too much out of that. Companies typically, especially when they announce acquisitions where they're using stock to acquire the company, a lot of times the stocks trade down a few percent, even if it ends up being an acquisition that makes a lot of sense and is good for the shareholders in the long term. A lot of times that immediate reaction is to the downside. So if you are holding Chevron or you are a long oil investor, I wouldn't be too scared, although oil prices, I think, are now, down pretty drastically 2 days in a row. A lot of uncertainty going on right now in the world, and so, oil prices are certainly reflective of that and very, very volatile, so, we'll keep watching that. Speaking of oil prices, check out gas prices right now. Okay, so gas prices have been moving lower. Looks like maybe we're starting to stagnate, find an equilibrium around here at $3.50. But the reason that I've been coming back and I've been coming to this site over and over again is because I truly do think gas prices right now. I think looking at the live gas prices is better than waiting for the CPI, because from last month's CPI, higher gas and energy costs were basically the whole reason CPI actually was a little bit higher than the month before. So logically, if the gas prices fall, then the CPI should fall too. So it's kind of like being able to track inflation in real time. I know it's not that simple. I'm not trying to make it be that simple, but from all the numbers I'm looking at, a significant drop in gas prices like we've had over the last month. You can see $3.85 to $3.55. That's almost a 10% drop. Probably about like an 8-9% drop in gas prices. That is significant and should have a significant impact on inflation. But of course, those are lagging indicators, and we won't begin to see those for another few weeks. Michigan gas prices are at the lowest point since May. So while inflation hasn't come down, and unfortunately, I think people are coming to grips with the reality that, most of the time prices begin to increase, they typically don't just come straight down at places like restaurants, grocery stores, etc. And people have noticed that, but as you can see in certain places, gas prices predominantly, that inflation does appear to be at least cooling. All right, now we'll talk about earnings for a little bit. So today, after the close, we've got some big boy earnings coming up. We've got Microsoft, we've got Google, we have Snap. So Snapchat, I'm going to start with Snap, even though it's obviously the smallest out of those three and the least impactful. Although, and here's what you've got to know, is that when Snap reports, it will be seen as a proxy, and Google. And I think typically you don't have Google and Snap reporting on the same day, so this is rare. But Snap, Google, and Meta are kind of your three stocks that are the most reliant on online advertising spending. So think about it. Google, Facebook / Instagram, Snapchat. All of these platforms are very high engagement. A lot of users, not a lot of like paid users. Like I don't pay Meta or Instagram or anything. I'm sure they have a plus subscription you can get to Facebook now for $5 a month or whatever. But I would venture to say that 99% of people on Facebook don't pay for that. And same thing with Google, and same thing with Snapchat. But these platforms rely on advertisers. So whether it's Snapchat, whether it is Google, whether it is Meta, any one of these companies' earnings give investors an insight into the advertising space to say, okay, advertising went up last quarter, advertising went down last quarter. If advertising was good for Meta, the assumption is that it's going to be good for Snapchat, and vice versa. We've seen that correlation break before, where I believe it was, what are we looking at, Snap here? When was this? Was this it? There was a day where Snapchat, no, it was more recent than that. There was one time where Snapchat, it was either like Snapchat reported earnings or Meta reported earnings, and they weren't good. And as a result, Snapchat stock traded way lower. But then Snapchat actually reported the next day, and the stock went up. Oh yeah, I think is this where it was? This has to be where it is. Yeah, because it went down 28% from Facebook's earnings, and then up the next day on its earnings, like all the way back up. I think this is what I'm talking about. Either way, they're seen as kind of a proxy for each other. I like Snapchat down here. And here's why. I mean, you can see from the chart, this thing, wait, why is... This chart's like not loading correctly, I feel like. All right, I don't know what's going on with this chart. Either way, Snapchat's earnings, I don't know if it was earnings, but some of their numbers got leaked and they were very good. So the stock's actually trading higher today. You can see up 2.5%. I still like it down here. I don't know what the earnings report's going to be like tonight, but I'm still a fan. Um, let's see. Alrighty, y'all. We've got some more content coming to you this afternoon. Cannabis Insider at 1 p.m. Swing trading at 3 p.m. So we're gonna go ahead and wrap up here on Benzinga Live, unless there are any stocks or trades you guys want to talk about. And then, yes, guys, of course, make sure to tune in next Tuesday, same place, same time, 11 a.m. Eastern on Benzinga's YouTube, completely free. Again, to continue our Kaiju/Benzinga educational series, we'll be talking about brokers. Find you the best broker. Jay Rice, pull up his tweets on seasonality. That'll be a good. Some more hints on this. I still don't know. That doesn't give it away for me what company Ryan was teasing earlier about, the one he was trying to short that kept going higher with the bullshit press releases and whatnot. But I'm sure if we do some digging and finding out, who are spies or claim to be spies who ran companies who have also dated spies, I'm sure maybe we could find it. But we'll see. Snap last four quarters, they've disappointed. Yeah, I think investors are expecting a beat this time, which is scary to me because you never really want to be like having the expectations be too high going into an earnings report. I'd rather the opposite, that the expectations are low. But again, I think and I haven't really done like that much due diligence into it, but from the numbers I've seen in terms of user engagement, monthly active users, especially among the younger generations, it seems like Snapchat is eventually going to be able to monetize its user and really kind of grow into its valuation. I mean, I don't know what's going on with this chart, but this used to be an $80 stock. It's down to $10. I don't, this isn't like my favorite stock out there right now, but this is a stock that I wouldn't mind putting some money into right now at $10, just because I think it's not going anywhere. And I think 5 years from now, we could be looking at it and being like, oh yeah, Snapchat had like 500 million young people using it every day. No shit, they were going to make some money off advertising or whatever it was. That was kind of like what happened with Facebook. Facebook went public and the stock, got battered for a while. I mean, it got absolutely crushed. And the whole knock on Facebook was, yeah, they have a lot of users, but they're not making money on them. And then Facebook eventually changed the way it serves advertisements. It started targeting advertisements a lot better. That's why on Facebook you get like, my name is Aaron, I'm born in May. And you'll get like sometimes these like funny t-shirt ads that are like, hey, if you were born in May and your name is Aaron, you're a badass or some shit. I'm like, who the hell would ever buy these t-shirts? But they started targeting ads like that specific to what you like, what you are, all these things. And that made their ads a lot more juicy for the companies paying for them. And so Facebook started to monetize a lot better and the stock took off. So I think Snapchat could see a similar track. Well, honestly, the problem is that like Snapchat's all like 16 to 20-year-olds on there and those people don't have money anyway. So like, why would advertisers waste their money on Snapchat? Because their users don't have money to spend, but neither here nor there. I mean, whatever. Yeah, the Ryan Dietrich tweet. Next episode on Thursday, we will I'll pull Dietrich's tweets up on seasonality. I haven't checked those out yet, and I don't want to pull them up without having looked at them. Just I'll look at them, and then that way I can share my takes on them. But Ryan Dietrich, I like his data, his tweets, good content, and I love he's a good devil's advocate to all of the doom and gloom you see on Twitter. All the like, oh my God, this is 2008. Oh my God, sell everything. Oh, the market's crashing. Oh, I'm so bearish, yada, yada, yada. Ryan seems like he's kind of more of like a perma bull. Like he'll always share data that makes it look like, hey, things aren't that bad. Which to his credit, I mean, if you guys remember like a year ago or whatever, when the markets were super ugly and everyone thought the sky was falling, Ryan was sharing things that said, hey, look, 99% of the time after a period like this, returns are positive over the next 6 months. And guess what? He was right. And I think a lot of times a lot of people were criticizing him and saying, oh my God, you're trying to paint a rosy picture. Look at what's going on. And he was basically the only one that I saw that was consistently saying, hey, look, things are bad right now. Things are crazy, but they will get better. History says they will get better. And so he's kind of, I've given him a lot of credit for that, because I think it's hard to do, especially when the common, group think is all going the other side and you're kind of standing up against it. And I don't want to say there weren't other people that were bullish at the time, because I'm sure there were, but definitely wasn't the common take to have at the time. But all right, guys, remember, just to wrap up, I'm going to update the description as soon as the show ends with those links and whatnot from Kaiju, so you guys can check those out there. We will be back live next Tuesday, 11 a.m. with Ryan from Kaiju. We'll be talking about brokers, so you do not want to miss that. Again, we're going to be doing an educational series every Tuesday at 11 a.m. Eastern on Benzinga's channel. Different topic each week. The goal is by the end of this series, you will walk out feeling like, hey, I can trade with the big boys. I know what they're doing. I know all the tips and tricks. I'm not going to say you're going to be Warren Buffett, but you're going to be better off with this information than you were without it. So with that, going to go ahead and wrap up. We'll be back. Again, great content throughout the rest of the afternoon. Make sure to tune in. Cannabis Insider at 1, and then we've got Swing Trading at 3. So without further ado, go ahead and wrap up. Peace and love, guys.